Good day, ladies and gentlemen. Welcome to the HEG Limited Q3 FY23 earnings conference call organized by SKP Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the conference call, please dial an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. Now hand the conference over to Mr. Ravi Agrawal, Head, Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. It's a pleasure to welcome you on behalf of HEG Limited and SKP Securities to this financial results conference call with the leadership team at HEG Limited. We have with us Mr. Ravi Jhunjhunwala, Chairman, Managing Director and CEO, and Mr. Riju Jhunjhunwala, Vice Chairman, along with their colleagues, Mr. Manish Gulati, Executive Director, Mr. Om Prakash Ajmera, Group CFO, and Mr. Gulshan Kumar Sakhuja, CFO. We'll have the opening remarks from Mr. Jhunjhunwala, followed by a Q&A session. Thank you, and over to you, Ravi.
Thank you, Naveen. Friends, good afternoon and welcome to our Q3 financial results call for the current year. Geopolitical situation continues to be worrisome, with no immediate end in sight, resulting in dragging down most of the rich economies around the world. Countries like EU, Japan seem to be the hardest hit, with soaring electricity and energy prices, leading to high inflation, high interest rates, etc. Steel production, being directly related to the GDP of any country, saw a decline of 4.4% in calendar year 22 versus 2021. If we exclude China, this fall was even more steep at about 7%. Meanwhile, the developed as well as developing world continues its efforts to decarbonize and reduce greenhouse emissions and have pledged large sums of money to be carbon neutral in the next 25 to 30 years. As most of you are aware, steel produced through electric arc furnace emits 3 times less carbon than similar steel produced by blast furnaces. This is giving a fillip to many new electric arc furnace plants being announced in several parts of the world. More than 20 million tons of greenfield electric arc furnace capacity have been announced by the US alone, out of which 7 million tons have already started production in the last 12 months, while another about 14 million tons would be in operation in the next 12 to 24 months, adding to large electro demand. Similarly, many large steel producers like ArcelorMittal and many others have also announced replacement of about 16 to 18 million tons of electric arc furnace capacities in Europe. As per electric arc furnace steel growth, excluding China, has grown at a 4% CAGR between 2015 and 2022. As per World Steel Association, electric arc furnace, excluding China, has grown at a 4% CAGR for the period 2015 to 2022, and now accounts for 49% of total steel production, up from 47% about 2 years ago. China, although lagging behind in this effort and producing only 12% through electric arc furnace, is also on the path to increase its EAF share of steel making to about 20% in the next 3 to 5 years, as they also make efforts to control carbon emission. We believe electric arc furnace steel production growth in the region to be the 4% CAGR in the next decade, which could see an increase of about 200,000 tons of additional electro demand. In the short term, the outlook for the steel industry appears to be bearish. Steel demand is still being impacted by the fear of a global recession. but the medium to long-term growth path for EAF is very clear. Our expansion is almost nearing completion, with 4 different processes already commissioned and starting to produce. One shop, the last shop, is running 3 months behind schedule due to delays in arrival of some imported parts and equipment from various overseas suppliers, which have already arrived as we speak at the plant. And we expect to complete the full expansion by mid-April, and with a brief period of trials and stabilization, it would also come on stream. Our capacity would then be 100,000 tons, making it the most modern and the largest state-of-the-art plant anywhere in the world. As our industry is very consolidated with technology in the hands of just 5 companies, and China, although having large electrode manufacturing capacity, is not a very major competitor to us in the UHP ultra-high power space, we believe that our expansion of 20,000 tons is fairly well timed and will be quickly absorbed by the market. Friends, now coming to our three, we operated at 60% of our capacity, which was the lowest in this year, and in the current quarter, January-March, we have inched up to about 70%. We've been able to maintain our product pricing in the past 3 quarters. This quarter's performance was reasonably good compared to past 2 quarters, despite lower sales of graphite electrodes due to the benefit of rupee depreciation and better profits from our hydropower generation facilities in Bangladesh. As is very normal in any business, when capacity utilizations are low, price has come under pressure, which is what we are seeing as we book orders for Q1 of next year. The needle coke procurement prices for the past 3 quarters have been flattish, and we now see some softening in the prices of the needle coke. As we are booking electrode orders for the next 3 to 6 months, needle coke procurement is also being done on a quarterly basis. So the movement of needle coke prices cannot be forecasted accurately, although our expectation is that they may soften a bit due to lower demand from electrical industry and abundant availability of coke due to slowing down of offtake by all the major graphite producers. All in all, we remain highly positive and confident about the medium to long-term growth for electrode industry, and more so for HEG. We being one of the most competitive producers in terms of quality and cost, and a wide outreach to global markets, which we have developed over the last 25 years, and continuously exporting about 2/3 of our production to more than 35 countries. Meanwhile, as you are aware, we are diversifying into graphite anode for lithium-ion cells, which form the batteries for electrical vehicles and energy storage systems. Given that it's the first such plant coming in our country, we see a huge opportunity here in the long term. We have incorporated a wholly owned subsidiary of HEG in the name of TACC Limited for this new business, and our board has approved a budget of rupees 1,000 crores for setting up manufacturing facility of 10,000 tons of anodes per annum in phase 1, which should be in operation by Q2 of calendar year 2025. Acrylic cells and battery packs are all imported into India, and soon there will be a huge domestic demand for graphite anode as cell manufacturing shifts to India. We see tremendous potential for this business in the next 3 to 5 years as more and more EVs get manufactured in India. With this, friends, I would now hand over the floor to our CFO, Gulshan, take you through the financial numbers. And then along with Manish, our ED, we'll be very happy to answer any queries that you have on electrodes, and Riju Jhunjhunwala, also being present on the call, can answer all the queries pertaining to anode powder. Thank you. Over to Gulshan.
Thank you, sir. Good afternoon, friends. I will now briefly take you through company's operating and financial performance for the quarter ended 31st December 2022. For the quarter and 9 months ended 31st December 2022, HEG recorded revenue from operations of rupees 530 crores as against 598 crores in the previous quarter and rupees 597 crores in the corresponding quarter of the previous year. Revenue for the quarter saw a decrease of 11% as compared to the previous quarter and on Q&Q basis as well. During the quarter ended 31st December 2022, the company delivered EBITDA including other income of rupees 170 crores as against rupees 198 crores in the previous quarter and 171 crores in the corresponding quarter of the previous financial year. The company on a standalone basis recorded a net profit after tax of rupees 103 crores in the third quarter of FY 2023 as against 130 crores in the previous quarter and rupees 109 crore in the corresponding quarter of the previous financial year. The company is long-term debt-free and has a treasury size of nearly 1,015 crores as on 31st December 2022. To take up more questions from the participants, the detailed presentation has been uploaded on the company's website and on the stock exchange. We would now like to address any questions or queries you have in your mind. Thank you. Over to Naveen.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question and limit themselves to 2 questions. You may join the queue again and time permitting, we will take your follow-up questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
Thank you for the opportunity. I missed the number of capacity utilization for yours in the December quarter.
I said October-December quarter was about 60%.
Right.
And in January-March, we have inched up to about 70%.
Right. And what was the number a year back in the same quarter? That's Q3 FY22?
In quarter 3, 2021-22, that capacity utilization was in the range of around 85%.
Understand. So, you did address in your opening remarks the reasons for lower demand, citing that from the expectation of a global recession. But could you elaborate more as to which countries particularly you are looking at this dip in steel production, considering that you are expecting almost 65 to 70% of your overall sales? If you could help us with the split of exports as well as which countries are the main pain point right now.
Manish, would you answer that?
Sonali, main, as we had talked in the last call also, we received pushback of orders from mainly our European customers, and because that is where and about 10% of our total sales were there. So it's not much, but still 10% is just postponed. It doesn't. And also, some people in some customers in the Middle East started to take their inventory levels, seeing a gloomy outlook. So that is one market. And also from Turkey, we received some slowdown of demand. So, I mean, US did keep going strong. These are some major countries where we export, due to which our sales have to drop to a 60% capacity utilization level.
Right. So, and of your overall split, which would be your key markets and how much would Europe plus Turkey be?
Europe plus Turkey would be, if we take our total sales, is about 15%, 3%, I would say. Europe and Turkey combined.
Understand. And then US and Middle East will, and Southeast Asia will be your other key markets.
Yeah, that's right.
Understood. So what are the current inventory levels in the channel? You did mention that some corrections in inventory going on. So just need to understand what is the level of inventory.
Right now, our finished goods inventory are close to 2 months. 1 month is very, very normal for any plant like us, because we make so many sizes, so many variants, that the total together is usually 1 month of inventory. And we have to but that doesn't really bother us much.
Understand. So also on the pricing, you did mention in your starting remarks that you were able to maintain the pricing. So are we saying that quarter on quarter there has been actually stability in pricing and no dip in terms of electrode realization?
The pricing has been very close actually. Very marginal changes quarter on quarter, but largely it has been stable up till now.
Oh, and are you expecting similar stability in pricing going forward, or are you fathoming some weakness?
See, from Q1 next year, as we are booking now, we are facing some pressure on that. That pressure is not like any big fall or any big dip. It is just everybody trying to sell that extra ton makes pressure on the pricing. We're not expecting a major change in that. But yes, if we are looking at 70% today, of course, we also try to sell that extra ton. So it will be slightly under pressure, it seems, for Q1 of next year.
Understand. And in that case, rate, you have decided to the commissioning to April 2023. So if I may understand, of your 12 billion rupees of capex, how much has been spent and how much you are expecting to spend in the coming quarter?
See, almost 1,000 crore has already been spent on that 1,200 crore. So we are just, we have to spend about 200 crores more on that. And we didn't defer the expansion as such. It is just that, as Chairman said, that 4 of our shops are already up and running actually. And there's one most complicated shop where there's such a variety of expense coming from US, They have got period due to their own supply chain issues. And they have also now, each and everything has been arrived at plant. Now that last remaining shop is being completed. So let's say 4 shops out of 5 already commissioned for production. We're just waiting for the 5th one to start in April.
Right. And just a last question from my side regarding your new business, that's graphite anode for lithium ion. You did mention that you're expecting 10 gigawatt capacity by Q2 CY25. So what would be the total addressable market for this? So just trying to understand how much are you expecting to cater to?
Yeah, Vijay will.
I'll take that question. What we are going to produce in our first phase is 10,000 tons of graphite anode. Now, this 10,000 tons of graphite anode would be able to cater to 10 gigawatt hour of cell manufacturing. And by 2025, we expect the Indian battery demand to be around 50 gigawatt hour, which turns into 50,000 tons of graphite requirement by 2025 in India. Out of which we plan to produce 10,000 to start with in phase 1. And obviously this demand is supposed to go up exponentially from 50 gigawatt hour to 260 gigawatt hour in 2030, which means by 2030 there could be a graphite anode demand of 260,000 tons.
Understand. Riju, and have we entered into any technical expertise for this? We seem to understand how we are going to develop this and what will be the key raw material as well.
So the technical expertise largely resides within HEG itself. A lot of the processes that are involved in converting carbon into graphite, which is what our USP is in HEG output, because not many people can do that. That is the single most challenging factor in this anode thing as well. The processes are fairly, simple in terms of coating, crushing, milling, etc. Most of the development that you see technology-wise are happening on the cell side. So whether they want to mix a little bit of silicon in it, whether they want to mix other things inside the anode. So that is not at our end. Our end, the whole thing is what micron, what size of anode to really produce. So yeah, we are taking help from a lot of global experts, individuals, but no real technical tie-up with a particular company to start with. We have taken a lot of help from a couple of companies in Austria on trying to make sure that to streamline our process. A lot of this thing with companies from China. But overall, I think largely the capacity exists within HEG to do this properly.
And on the value chain, does needle coke remain as a key raw material for this segment as well?
No. So that's the thing. In this, we can really play around with the raw material, for which we have already started our this pilot plant we've already installed in our existing graphite plant, which can produce around 100 tons of graphite powder per year. With this, we'll start working with all the cell companies in what kind of product they need, and depending on the kind of end use of the product, the raw material could vary from needle coke or very good or very high-end material to the regular Indian coke or imported Chinese coke as well. Today, you must understand 90% of this material is being made in China by Chinese coke. That's a proven raw material. So raw materials we can play around with as per the customer's requirement.
Got it. And just squeezing in one last thing, just wanted to confirm if I got the numbers right. In your opening remarks, you did mention that 7 million metric tons of EAF have commissioned in the last 12 months, and over the next 12 to 24 months, expecting 14 million metric tons to be commissioned.
आपने बोला था new EAF capacity 7 million has already been started.
Repeat that question, Sonali.
Yes, so I actually seem to lose out on your opening remarks a little bit. So 7 million metric tons of EAF commissioned in the last 12 months and 14 million metric tons to be commissioned in the next 12 to 24 months. Is that right?
Yeah, you're right. And this is only in US. I mean, these are the specific number that I gave you was 7 million already commissioned. Another 14, 15 million being commissioned between now and 24, 25, so let's say middle of 25. And then there is another set of 20, 25 million tons, which is coming up in Europe, which is a couple of years behind the US. You see the backdrop is US produces more than 72% of its steel through electric arc furnace. So they understand the advantages of electric arc furnaces much more than the Europeans or rest of the world knows. Because typically, as you know, electric arc furnace is close to 49% now, minus China. US has always been 70% plus. So they have taken the lead in terms of adding more and more electric arc furnaces because of carbon emissions.
Understood. And this 2025 in Europe will be commissioned over the next 3 to 4 years. Is that right?
I mean, they are talking from 2024, 25 to 2028, 29, 30.
And this is fresh or conversion from POF to EAF?
Both of them. I mean, they'll be closing down some of the blast furnaces and replacing them by electric arc furnace, or in some cases, they're also adding electric arc furnace.
Perfect, sir. It's very helpful.
And as I also mentioned, in the last 3-4 years, according to the WSA, the World Steel Association, the growth of electric arc furnace has been about 4% CAGR, which has led to the total steel production minus China through electric arc furnace, which used to be 47%, now being 49%. And they do expect this trend to not just continue at 3.5%, 4%, but move it further north, because as more and more electric arc furnaces are being established and operating, one can visibly see the drop in the carbon emissions. And that's the backdrop in which we said that if we do have a 4.5% CAGR on electric arc furnace steel production, which is currently close to 50%, let's say 49%. So doing that math in the next 4 or 5 years will lead to an additional demand of close to anywhere in the region of 200,000 tons, which is a very, very huge number. I mean, we haven't seen this kind of growth in the demand of electrodes in the last 20, 30 years.
Got it. Thank you. This is very helpful, and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Last time during the call, you did mention about the graphic issue and how their nipple issue were pertaining to which they won't be able to proceed with production. Where are they in terms of the issue, and how is that going to affect the electrode markets going ahead?
So, I mean, we can only talk about whatever we have read or heard from the marketplace. I mean,
Yes, sir. Yes.
Graphic has very clearly come out with an explanation that I think this Mexican plant was closed for about 2.5 months. And apart from the capacity loss due to the closure, the bigger problem in their case was that the entire nipples, I mean, the company has 4 or 5 different plants in 4 or 5 different continents. So 100% of the nipple production used to happen at the Mexican plant. And as you know, electrodes are of no use without nipples. So they used to air freight all the nipples to the other 4 plants as far as Europe and America and everywhere else. So that has led to a lot of mismatch in their nipple availability because of the 2 months of delay. So probably that is one of the reasons in their recent Concall they have also given a figure, I forget that number. They have clearly said that their sales in the first half of this year is going to be substantially lower, not only because of the demand slowdown, but more because there has been nipple mismatch. You see, just to continue to explain, the nipple takes anywhere between 4 to 6 months to produce. For different sizes of electrodes, you need different sizes of nipples. And as you go more and more towards the high value added or the larger diameter electrodes, the timing goes from 4 months to like 6 months. So obviously, a 2-month stoppage in that process of the entire capacity of 200,000 tons obviously leads to a lot of issues for the next 6 months.
So, just keep this story apart. Had this not been the case, then the sentiment in the market would have been more specific, because their capacity is off the figure as of now. They are not feeding the market, and then also we are at 55.
Oh, they are feeding the market. I mean, that's what I'm saying, sir. I think I forget the number, but they have given a number of the tonnage which is going to be sold in the market, which is practically 40-50% of what their normal sales would be.
And this particular nipple product, we are doing it ourselves. We are not dependent on other manufacturers. We are not pushing it from their end.
No company does this. I mean, everybody produces electrodes and nipples. But in our case, or let's say in case of Graphite India, since there is only 1 plant, or in case of Graphite India, now there are 2 plants. So nipples are all produced by everybody.
And when we look at Turkey being also a very important client of ours, how has this catastrophe affected their demand and their deliverables? So going ahead, what kind of deliverables are scheduled for Turkey going ahead for this quarter?
Manish?
Sir, I would like to put it this way, Concall, that what they told in the public statement, that their ability to service some orders will be impacted because of this problem which they had last year, had more than a month. So there has been interruption to that extent from their side. But additionally, they have said that in their European plants, they will be working at 1/3 of the production capacity for 2023. But they've been silent on what reason is that, whether it's demand, it was whatever. But they did publicly state in US that the ability to service some orders in Q1 would be impacted. H1 rather.
I think his specific question was about Turkey, the problem of Turkey.
Yes.
No, but
If I may put it in the way that what was the quantity for Turkey for December quarter, and how are the deliverables being scheduled for the March quarter? That would give us some more, and you may also add more.
See, every year, in tonnage terms, and we supply about 11 or 12% in Turkey. So that was now down to, let's say, I would put it this way, 6 or 7%. We're just talking about HEG.
Okay, so the schedule for March is half the tonnage what we have done in December.
Yeah, you can say that. Whatever we were selling in there, let's say over the year, if we just total, it's probably going to be half of that.
Correct, sir. And generally, you did mention that the near-term outlook still sounds bearish. If you could elaborate more, is it totally aligned to the lower utilization levels of the steel industry, and how are you seeing this dynamic changing ahead? Barring this shift towards the EF route, other than that, what factors would you see that would lead to reversal? I mean, when you are getting the lower utilization levels for March and even on the first quarter, if you could throw some more light on this one.
Manish, continue.
Yeah. So, I would like to say that this 70% capacity utilization, which we are talking about Jan to March, is likely to continue for at least 2 more quarters. The major reason for this lower capacity utilization is the drop in steel demand and steel consumption, and that we expect to continue for at least 2 more quarters, what we can foresee. But eventually, of course, this the new years and everything coming into effect will try to reverse this slowdown in the demand. I mean, the total steel production made from the EF route. That is our expectation. We should be in 70% Jan to March. We should be at 70% level the first half. And as our other industry players are also saying, that we expect a turnaround by the second half. And obviously, people may not say so, but everybody assumes the war to someday get over, and the steel back on track.
Correct. I'll join the queue again.
Something positive in our case is,
yes, sir.
You see, as I said, America is the only country which produces more than 70-75% of its steel through electric arc furnace. And America probably is the largest steel producer after China in India. And maybe Japan and America more or less are in the same range. So 70% of that is steel, electric arc furnace, and that is where they are adding another 20-25 million tons. And for a very long time, America has been a fairly large customer base for us. We had started exports to America more than 20-30 years ago. And we've been able to nurture America fairly well over the last 5, 7, 10 years. We continue to add more and more customers every year. And not only more and more customers, but we're selling more and more tonnages also in America. So this is just incidental that we have been in America for a very long time. And that is where the largest growth of electric arc furnace is happening.
Right. And sir, to conclude, you also mentioned about needle coke pricing to be on a quarterly basis. Were you hinting for that because the line got disrupted at that time? What is the time? Yes. Sorry.
It is quarterly, you're right.
And currently, how is it done, sir? As of for this financial year, are we doing a long-term contract or contract size is greater than 1 quarter?
In the last 3-4 quarters, it has been quarterly.
Okay. So sir, taking into account and RM basket, I think needle coke is the largest component. How should we expect the margins to be going ahead about understanding?
Manish, would you answer?
Yeah. Sir, how we look at it is we look at the spread between what price of electrode we can get from our customers and what we have to pay to our needle producers. What the trend which is there is that, yes, there is down in demand. Like if we are at 70% today, other players are also around that level. I just saw that, I think, one of the major competitors also around 68%. So, that will result in more than enough availability of needle coke in the market. Therefore, we expect some respite from needle coke people also to adjust the pricing a bit. So if we lose a few dollars on the electric price and we gain that same on the needle coke price, so that way our margins, what you have seen this quarter, should remain that way. Maybe the numbers slightly here and there, I cannot say really, because we don't know what needle coke suppliers will come up with, what kind of pricing they will come up with. So we are more concerned about the spread. So if there's a depression in the price, we get some respite from needle coke people, so we are able to maintain margins.
Correct, sir. And on the power and fuel part, sir, I think so we have 70%. How is the power and fuel line item shaping up, and how much dependence is on the external source?
See, our power comes from the state electricity board, and that prices are good, which we have. They've been stable for some time, and likely in the near future also. And we have those two partners, which we are not running at present.
What is the cost per unit, sir, currently?
Mr. Kapoor, I request you to join the
Yes, ma'am. Yes, ma'am. Only if sir could answer this call.
Yeah. I would like to say it on this call, and after this call, simply I can call and share what kind of pricing of electricity is. Not at this forum.
It's a fixed price kind of a contract for a certain number of years.
Right. I'll join the queue, sir. Okay. No questions.
Thank you. To participants to press star and 1 to ask a question. We have a next question from the line of Amol Rao from Kitara Capital. Please go ahead.
Good afternoon, sir. So thanks for the opportunity. I just would like to know that last quarter we had built up a HG inventory of around 400 crores, and this quarter we seem to have done something similar. So considering that, I mean, these noticing some softness in the offtake of electrodes, what would be the rationale for building up inventory? Because we're not really got to take balance sheet heavy kind of business in our practices, you know. So why are we building up this finished goods inventory? If I may get some clarity on that.
Yeah, sure. I'll tell you there's a very simple logic. I mean, if you look at our cost structure, needle coke is one of the very large component of our total cost. So our cost of conversion is not very high. So either you keep coke, which you have already purchased, which we had already ordered in October, November, December, not knowing the slowdown will continue for so long. Given that one has already got the needle coke stock lying at the plant, it doesn't take too much effort or too much cost to convert them into electrodes. On the assumption that more and more new electric arc furnaces are being commissioned, especially in America, as I said, and another 15-17 million tons are going to be commissioned between now and end of next year, we decided to keep converting the coke that we have. So in case of a sudden requirement, in case of a sudden change in the situation, overall global situation, we don't want to be facing that situation that when the demand comes up, we are not ready. So we are just keeping the finished product rather than keeping the coke.
Got it. That's very helpful. So, would it be right to assume that between now and say next 12 months, inventory should be down? Gradually?
Now we are not buying it. We have not bought any needle coke, let's say, in the last 3-4 months. I think our last shipment would have been more than 4 months ago.
Okay, sir. So the finished good inventory should be run down gradually over the next 2 quarters. That was my question.
Yes.
Correct.
Okay. And so I think the gentleman before me asked this question about Turkey. So what we know from reading that Turkey imports a lot of scrap steel and manufactures a lot of the EAF. As per your intelligence, your feelings, is this capacity out for quite some time, or do you think that this comes back on track sometime in the next 5
No.
months?
Let me clarify this. See, there's no plant in Turkey which is not closed. See, Turkey is one market which is the quickest to respond either way. You very rightly said they import a lot of scrap. They have all used those scrap in the electric arc furnaces, and these people are steel industry is the quickest to adjust to the demand for steel. So there's no shutdown of steel company or a steel plant as such. They just decide to run at 50%, 40%. That's what they do. The moment they see the rising stock of rebars or any kind of steel they make, they quickly turn it down. So it's no closure as such. They're very much there.
They balance out the supply. That's what I'm hinting at.
Yeah.
Flood the market.
Yeah. So,
And so I know this is very difficult for you all to answer, crystal gazing. But given, whenever this war ends, given the amount of reconstruction that is expected, the demand for TMT bars, for that reason, where would that be mentioned? Because if I'm not mistaken, the steel factory in Ukraine is pretty much being bombed out of existence. So,
yes.
Where does it get next from? For, whatever your clients say, it gets met from mainland Europe, Turkey, and those kind of places, or the imports of somewhere else?
I think so. See, these markets like Ukraine will definitely be served by countries like Turkey, even India. Why not India? And all over the world, wherever they will have this extra TMT. But yes, huge demand will come in once the war gets over. That's correct.
All right. That's it from my end. Thank you, and wish you all the best.
Thank you. We have a next question from the line of Preet Malji from Centra Advisors LLP. Please go ahead.
Yeah, thank you for having me. I wanted to understand, from my calculation, CapEx per ton comes around 6 lakhs. And I want to understand what is the target ROC that they're aiming at.
Gulshan, will you answer?
Yeah. Hello?
Yeah.
Yeah, we are expecting, if we talk about this 1,200 CR and additional tonnage of 20,000, it comes to around 8,000 per ton. That $8,000 per ton. So we are expecting that EBITDA margin from this business would more or less remain the same.
Okay. Okay. And as we know, there has been no real expansion in the electrode manufacturing all over the world. And we are expecting to another 2,000 tons, 20,000 tons. So what utilizations are we aiming at right now?
If you see, we are the forerunner in this that expansion, and no one other our competitor internationally and domestic has announced any sort of capex announcement. So we are expecting that we would be able to capture this market once the demand comes into the picture in future.
Okay. And the needle coke demand. So the needle coke is also being used for batteries. So do we see a shortage in supply of needle coke for graphite electrodes because of its usage in other things as well?
See, needle coke is used very marginally. Sorry.
It's a very difficult question to answer. Basically, we've been talking about it for the last 5, 6, 7 years. There are at least 10, 12, 15 different raw materials which go into the battery manufacturing. Needle coke is one of them. So, and for us, needle coke is like the main raw material. So whenever we have seen the electrode prices going up, leading to more demand of needle coke, we've seen that the graphite industry has not suffered because the price that the graphite industry can pay for the needle coke is not what the battery producer can pay, because he has an option to either use needle coke or replace needle coke by, let's say, 10 other raw materials that he already uses currently. So that is a simple answer, basically.
Okay, so it will not hamper the prices for us at least.
Yeah. You see, it's very simple. If needle coke prices go up, well, the electric prices will go up. I mean, basically, we are, as Manish was trying to explain in one of the questions, we are looking at the spread. And what had happened 4 years ago was quite natural. If the needle coke prices went up, electrode prices went up. It's basically the demand for electrode.
Right. Thank you. And I wanted to ask one more question on the new business segment of anodes. How are we going to finance this new segment? Because we see that we need an additional capex of 2,000 crores in tranches. So how are we financing that?
So for the time being, it's fully internally financed. I mean, our cash flows will allow it, but obviously we'll see the cost of financing from outside, the cost of finance from our internal accruals. So it would partly be bank finance, partly our internal funds.
And this 2,000 crore is divided into two phases. Phase 1 spend 1,000 CR for phase 1, and after that we are going to spend 1,000 crore for phase 2. So it depends, means earnings and the debt equity ratio, both would be from that HEG side, in the form of equity and two internal accruals.
Mm-hmm. Okay. I think that's it from my side. Thank you so much.
Thank you.
Thank you very much, ladies and gentlemen. As there are no further questions, I'd now like to hand over the conference back to Raviji for his closing remarks.
Thank you, friends, for joining us on this call today. I mean, just to repeat what I said in one or two sentences, looking at the growth of electric arc furnace in the last 12 months and what is likely to happen in the next 2 years, and follow up in Europe, we are pretty confident about the optimistic note that we are talking about, because at least for these 30-35 million tons that we are talking about between Europe and America, we have the details, we have the names, we have the locations of all the new EV plants coming up, and we are fairly well equipped to meet all their demand. And especially since there is no new capacity coming up, we are pretty confident that it may be a matter of 1 quarter, 2 quarters, or 3 quarters, but we should be able to sell whatever we produce, because we have been in those countries, we have been exporting to all these customers in the past. We are qualified at most of these new locations, which are now establishing more and more capacities. So we are pretty reasonably confident about our being able to meet that demand wherever it comes. So with that optimistic note, I'd like to thank you once again, and I look forward to talking to you after 3 months once again. Thank you.
Thank you. On behalf of HEG Securities Limited, that concludes the conference. Thanks for joining us, ladies and gentlemen. You may now disconnect your lines.